Hello everybody, welcome to another episode of Erickson TV. Curtis here, how you doing? I wanted to talk a little bit about taxes and then mostly about investing for your retirement today. For taxes, for those of you that have not finished filing your 2010 personal tax return, that final extension deadline is coming up on October 17th this year. So if you're planning to have me help you with your taxes and you do not have your tax data in yet, please get it here sooner than as soon as possible. And I appreciate that. Let's move on to retirement investing. There's an article in the USA Today Money section, and this was there's two articles. The one headline was "Worries about Retirement Increases. All ages are uneasy about life after work and the uncertainty of the future." And then the second headline was "Investors get blown away in the third quarter of 2011. The rotten climate has many saying that enough's enough for investing in stocks." So two things. First of all, I think there was a disconnect between the stock markets. Virtually every asset class went down, by the way, last quarter. Doesn't matter if you're U.S., large or small. Doesn't matter if you're international. Doesn't matter if you're in China. It doesn't matter if you're in gold funds. They all lost money last quarter. The takeaway from that is that I think there was a disconnect because at the same time that this was all happening, there was an all-time record for the S&P 500 U.S. companies reporting solid or above average earnings for the quarter. So the profits are there. The corporate profits are doing really well. The corporate balance sheets, the cash, is something like the all-time best ratio between the amount of cash the corporations are holding versus their stock price, going back to since like the 1950s. Okay, so there's a little disconnect there. So what are we doing for our clients? First of all, we're not panicking and selling at the bottom. And in fact, if you panicked and sold it at the end of the quarter, you would have made a mistake because the portfolios would have already been up since then as of today's market price. Number two, while the markets were declining, we took some excess cash in the portfolios and bought more stocks while they were cheaper. Okay. Thirdly, we're looking at some of the mathematical probabilities, and I think there's a lot of emotion. The individual investor makes lots of investing mistakes. In fact, they are leaving the market by billions of dollars, going back to actually since 2008. Even with 2009, with the market going way up, billions of dollars of individual investors' money was leaving the stock market. And then the same thing happened in 2010. The same thing's happening in 2011. And it's interesting, but the institutional investors kind of do the opposite of what individual investors do. And we invest for our clients like institutional investors. Institutional investors are actually adding to their holdings. They're investing more now while the market's down. In fact, usually, like when the individual investor feels enough is enough, that's when more investors swoop in. And you can kind of see this happen in the last few days. Just a couple days ago, the market was down a couple hundred points, and then in the last half hour, investors swooped in and made it go up over 100 points in about a half hour. So what are the institutional investors doing to finish this off? And this gives you positive feedback to move ahead, to know that you can invest like an institutional investor. So for instance, the company, the insiders that own their own company's stock, they have a new rule under current regulation where if they buy their own company's stock now, they have to hold on to it for at least 6 months before they can sell it. Well, they've significantly increased their buying, $750 million of buying their own company's stock just in the month of August alone. Okay, so that goes against the market trend. Number two, hedge funds that own 10% or more than one stock, they have the same regulations. They have to hold on to that stock for at least the next 6 months. They were net buyers in August to the tune of $1 billion. So I'm trying to give you some ammunition to feel comfortable as you see your statements that there's a plan. You can have a plan and you can move forward and invest like an institution, and don't invest like the typical individual investor that makes mistakes and sells at the bottom. So I want to thank you for watching this episode. If you would like some personal consultation about your individual portfolio, please contact me, by telephone or by email, and we'll see what we can do for you. Have a great day. Talk to you soon. Bye now.